Okay, folks, welcome to Market Wrap. It is Halloween. Happy Halloween, the 31st, and the month is now over. So what I want to talk about tonight is where I left off last night, and it was a conversation with regard to fear. And fear is going to drive this market in the next couple of weeks and possibly even longer. Why is that? What's the fear from? Fear of indecision. Fear of the unknown. Fear of what a Trump presidency may be like. Fear of the great unwind that is going on in Washington, whose head's going to roll next, and what's going to hit the headline, and how is it going to drive the markets. So fear is creeping into the markets. We've seen it reflected in the VIX. We're also seeing it in the high-yield debt market. Remember when we went into last year, the high-yield debt market had already been in a free fall. At the beginning of the year, 2016, the high-yield debt market, as reflected back here, was really cratering, bottoming out. Yellen raised rates in December, promised several more rate hikes going into 2016, and of course, they never happened. So the high-yield debt market was bailed out for all intents and purposes. Now what I'm seeing here set up on a daily chart is a very, very bearish divergence. The RSI on the high-yield debt market peaked back in August, late August. And ever since then, while we've been able to put in higher lows and higher highs on the high-yield debt market, the RSI has never ever confirmed the breakout. And now we are breaking down. We broke down in earnest back here below the lower band of the rising uptrend channel back in early October. Ever since then, we've been limping up, and now we are rolling over. Sell signals all over the place. And then today, which is really the reason why I'm talking about it, as I went through my scans and I saw this hollow candlestick. And if you've been a member for any length of time, you know when I see hollow candlesticks, I get very, very nervous when they're at the top of a trading range. And when you add the bearish price action that we saw today, and new members may be saying, we closed flat, Bob. What are you so nervous about? What I'm nervous about is indecision. That generally means a trend reversal. And after you had all of these topping tails and bearish key reversals over the past several days, this is not a good sign. This price action. Take note of Ultimate Oscillator, breaking down hard. And when you take a look at the weekly chart, before I go there, we break down and close below this red line here, the lower band of support. It's all over for the high-yield debt market, and you're going to see it reflected in the S&P 500 weekly chart. You know what? Actually, we're going to go with a monthly chart, and the reason is this. It's early in the week. A lot can happen, but the month is now over, so it's best, since October is now in the books, let's take a look at how we are trading. And you could see, here's the Yellen effect back here. We bottomed out. Then it was off to the races. A huge year for the high-yield debt market. But these were traders chasing yield, hedge fund managers chasing yield. Now, we hit this month, October, the opening price seen back in January of 15. So we are now at resistance. We closed off the highs of the month. We still close positive. It doesn't mean we're going to go straight down, but I think that we are going to get a serious pullback in the coming weeks. The 10-year yield weekly chart, how did we open this week? We gapped down into last week's trading range. So that bodes well for our commodity plays. Daily chart, the VIX. Okay, it rallied today. More topping action, so we didn't have a clean breakout. Let's update this chart. Okay, I'm going to update my last comment. This is the value of drawing your lines. We did break out today, and we closed above it, but we did have topping action. So what I think is going to happen here, and for new members, when you see topping tails on top of these candlesticks, that's a sign that you have sellers above. No big deal. But what you should expect to see is a pullback and a retest of this breakout point. If it holds, you're going to see the VIX rip higher. The chart looks very, very good. I think the VIX consolidates and then moves higher later this week. The US dollar opened up strong today. Very, very strong closed week, as noted by this topping tail. Ideally, we break support. That's going to send our commodity plays rallying. 2-hour chart. Take note of how last week we broke down below the lower band of this rising uptrend channel. We have RSI breaking down, putting in lower highs and lower lows. Price today really just puked all over itself. I'm looking for a breakdown below 25.39. The events that are unfolding in Washington right now, it's unprecedented. And I think it's so dramatic that it can influence the US dollar, which was extended to begin with. So this drama that's unfolding in Washington is not going to help any. The transports. I mentioned this last week on Wednesday that we had flashed a bullish key reversal on the 27th, yet the markets closed down on the day, so the transports was showing relative strength. And it pays to pay attention to divergences like that because the transports look poised to rally. Take note of the higher low on Stokes, double bottom setup. The transports are going to move higher. The question is, what transports will it be? And I think our answer is here in the airlines. Bullish key reversal today, and the proximate cause of that sell-off, look no further than what I warned about over the weekend, and that was oil. This is the USO. I'm going to pull up the U.S. Oil Trust. Remember over the weekend, I talked about how this chart was weakening, and today it just got clubbed like a baby seal. Remember that the reason why, going back to the high-yield debt market, the reason why the high-yield debt market went into a free fall was because of declining oil prices. Now, how are those two correlated? The reason is this, is that you have all the fracking companies in North America. They went out into the debt market, took out huge amounts of debt to finance their operations. Oil prices went down, so did the value of those bonds because defaults were looming. Now, going back to oil, if oil begins to break down in earnest once again, what's that going to do to the high-yield debt market? It comes under pressure once again. This is why we can look at charts all day long, but it pays to pay attention to the overall economy as well. So oil, a horrible day today, a shockingly horrible, down almost 4.5%. The NASDAQ composite held support today. It looks like the NASDAQ is possibly going to break. We may get a bounce off of the support level, but I think that we are going to break in the next week or so. The S&P 500 bearish key reversal today. It tried to recapture support, failed. Volume well above average. We're having institutions dump shares, double top here on ADX red. Note the divergence, lower highs on Stokes. IWM, we booked profits last week on our short position of IWM. Let them rally it higher. I think it fails and it rolls over once again. Volume was well below average to the upside. Let them rally it. Some of the indicators are oversold. Once we see a reversal day, we add back to our short position. The banks, I warned about them over the weekend. They should have rallied last week in the face of higher yields. They didn't. This week in the face of lower yields, they were hurt. And I think they're probably going to pull back even further. All right, let's talk positions here. PLG, very, very weak. I would have thought that today with the price action on the dollar, we would have seen some strength out of Platinum Metals Group, but it didn't happen. When we take a look at a 2-hour chart, we're consolidating. No breakout yet. We're still rolling over an ultimate oscillator. Stokes may be putting in a higher low here. USLV, bullish key reversal today, but we did not clear resistance. I think we're going to do it tomorrow. Volume is still weak. Look at this cup with handle formation on Ultimate Oscillator. I think we're going to break out. Gold, silver, and copper are up in the aftermarket session. NUGT broke out today, folks. We continued last week to build on our position. Take note of the cup with handle formation. And let's just say we're at a breakout point above the pivot point on NUGT. Volume could have been better. I wasn't all that impressed with today's volume. Ultimate Oscillator looking good. All the indicators are looking strong for NUGT. Let's take a look at let's go to a 1 hour chart. Here's the dollar overlaid in green. You can see that they trade inversely of each other. The shares rallied through resistance. We have a higher low getting put in from the prior lows back here. Once we clear $15 per share, I think we're going to hit $17.50 fairly quickly. Yang, daily chart, down day today, but it closed off the lows of the day. We're going to remain long. The shares are looking really good. We have Stokes that have broken out now. BRZU, we continue to watch the BRZU. It behaved well for most of the month in the face of a rising US dollar. I was rather surprised today when the BRZU gave up most of its gains despite the fact that we had a weak US dollar. LABD, we're going to continue to watch LABD. I think that we have a momentum trade on our hands here. The way I like to play momentum trades is that if we get a rally up and through either the prior day's high, which was today, the 2742 level, we'll look to open a position. Ideally, we add more on a rally through 2775, which marks resistance where we sold the other day. Volume was very light today. That's a concern. So that leads me to want to take a look at the intraday chart. Let's go with the 2 hour. A little bit extended here, but I could still see it moving higher. Here's a problem. Let's draw some trend lines. Okay, so if you're wondering what caught my eye, it was Ultimate Oscillator. Now, take note of the upper band of resistance. It's in a downtrend despite the fact the shares have been moving higher. That is a divergence, and while not a reason to go selling shares in and of itself, it's a reason to get concerned that any continuation move higher won't be met with some selling. So momentum is beginning to wane on the 2 hour chart. So a caution flag is on the track. Does it mean I won't trade the shares? I'll have to take the pulse of the market tomorrow. If it's a bearish mood in the market, well then I would be more than willing to take the risk, perhaps not with as big of a position as I would have normally have taken, and we'll look to add on strength as the shares prove themselves. And if they don't prove themselves, we stop out. Let's leave off with CLLS. All right, so we added today. The shares were rallying back. I added to the position. They continued to rally. They were unchained on the day, and the shares just puked all over themselves. At the close, let's go to a 2 hour chart. All right, so here's the reversal bar after we had a bullish key reversal earlier in the day. So we filled the gap and then sold off. Not a good close. But what I do like here are two things, and the most important things when it comes down to indicators. My RSI and my stochastics are forward-looking, both of which are hooking up and putting in higher lows, despite the price action at the close. So we're going to remain long and we'll look to add more to our position. And that's why I mentioned in my alert today, I was keeping dry gunpowder on the side. Remember, the key in this game is your capital reserves. You need to have your capital reserves when you're trading extreme oversold stocks. That allows you to play another day. So CLLS, we'll be looking to add more in the next couple of trading days. And that's it for tonight, folks. Keep an eye on gold and the VIX. Everybody have a great night. I'll talk to you tomorrow.